Thank you for joining me. I'm Gord Long. A reminder before we begin, do not trade from any of these slides. They are commentary for educational and discussion purposes only. Always consult a professional financial advisor before making any investment decisions. The purpose of the audio slides is to talk about the areas that are not updated in your monthly analytics and technical analysis report. This is based on our annual cycle, as outlined on the subscriptions page on our site. We intentionally keep the technical analysis charts to the subscriber reports so as not to confuse them with the drivers operating behind them. Drivers in the long term are primarily the fundamentals. In the intermediate term, it's about risk, and the short term is about confidence and sentiment. In this month's LONGWave video, I'd like to discuss methodologies that we use in our strategic investment insights. As such, I would like to cover those items shown here. In December 2018, we released two videos discussing the MATASII approach to developing our 150-plus SII watch list. Each of the videos focused on one of the two process cornerstones used by MATASII. One, cycle positioning, and two, asset selection. Today, I want to take both of those videos a step further by explaining what goes into actually making these two processes work together, the integrating glue, if you would. If you haven't already reviewed these videos, you'll need to for a fuller appreciation of what we will be talking about in the following slides. In the way of a recap for those who have, and some key points for those who haven't, let me touch on some highlights. Cycle positioning is about understanding where we are globally and domestically in the economic, business, credit, and market cycles. Shown here is our current global economic positioning by the major countries we at MATASII include on our watch list. Critically important among the various cycles is the global credit cycle, its positioning, since we have shifted over the last 30 years from basically an era of capitalism to what we can best term as creditism, and we've talked about this in other Under the Lens videos. Assets shift in importance and relative value based on the positioning of the market cycle. This slide shows you a high-level historical pattern that has been fairly consistent. In actual fact, we have just added coverage of the three sectors highlighted in red in the upper right corner. The cycle positioning has worked extremely well, as this chart from last fall called rotations and shifts well in advance, remembering that everything keeps changing, especially as the global central banks react in ways never witnessed previously. The asset selection process follows this funnel diagram, with proprietary MATASII methodologies used and highlighted here in red. But that is not the focus for today. Today we want to talk about using these outcomes and the tools that allow them to work effectively. MATASII is a very large site, as I'm sure you have found. Frankly, it is too much information if you do not know what you're looking for and how to integrate that information and research. We do this for you, as I'll show. The Gordon T. Long sub-site section focuses primarily on the macro. This is critically important because the vast majority of investors and traders have their heads down in the short-term details, and as a consequence, they often miss or get blindsided by major changes that can come as a shock or like a glacier that are often left for another day, changes that make portfolio performance stand out over the longer term. We have found that it is a fatal mistake not to study the macro, if only to avoid the destruction it can have to portfolios, besides positioning for well-telegraphed positive moves. The recent stealth shift by the central bank money flows is a classic example, a shift which triggered a historic record lift in the financial markets over the last 60 days. MATASII was out in advance of this, signaling 2019 to be the year of the right shoulder. There are three levels in the MATASII subsite that brings all this together. The home page gives overall tracking of the MATASII watch list. Each of the 12 SII sectors has its own home page. Here we consolidate the investment thesis, key highlights, major charts, ideas, references, and information on the particular SII that needs to be considered and followed. Below that, there is an individual page for each of the 150 securities plus on the MATASII watch list. These pages are important integration pages. They are generally all formatted in a similar fashion. At the top is the initial idea and technical analysis. The idea may not change for a number of years, but we endeavor to make sure the chart is usable for the long term with critical support and resistance levels, whether the security is going up or down. Charts as such are both longer-term weekly and daily annotated technical charts. They include the initial long or short trigger, as well as the HPTZ or high probability trading zones that we have recognized. On the bottom of each page is what I believe is the most important part, or the integrating information. It is called the macro analytics section. This is named the same as your YouTube channel, where we also integrate guests and research in a video format. In this section, we show the information listed and highlighted here, along with security-specific research we uncover, and as we uncover it. It is here that I want to dwell specifically today. The charts we show in these pages are listed here. All have different information than shown on the initial ideas chart. The only data that rolls over from the ideas chart is the long and short idea trigger levels. They are ranged by time frame, as often long or short positions will vary over longer periods. We have the primary indicator, two of them, that looks at things from a longer-term 6-month to 2-year horizon. The two charts, one is a 12-24-month moving average bands, and the other is a 15, 13, 21 monthly exponential moving average. The secondary indicator is focused on the intermediate term, which we define 3 months to 12 months. It uses a 20, 40, 80 weekly moving average incorporated with our exclusive and proprietary MATA indicator. The tertiary indicator is really the near term, the next 1 to 3 months. It also uses a 20, 40, 80 weekly, but is focused on Bollinger Bands in how they operate. Before we add securities that meet the cycle positioning and asset selection process, we also run it against our proprietary, what can be best termed a trend following methodology. We don't want to be in particular securities that will underperform the sector itself, but rather those that have the best chance of outperforming the sector. I'm going to focus on our recently added Utilities SII and the Southern Company here as an illustrative example of what you see on the site. It is shown here among the initial 5 securities chosen. We normally like to choose at least one broad ETF and 4 individual securities to initiate a coverage of a sector. We then continue to add from there as our research progresses. And in cases like the retail sector, we have upwards of 30 individual securities that we're still tracking. The first chart on the top of the securities page is the initial idea. The write-up is not shown here, nor the link to this chart in real time, which we have posted on the site to save you valuable time. In orange are the triggers outlined in the write-up, as well as the MATA Momentum, Analytics, and Technical Analysis indicator in the bottom panel. If you clicked on the real-time chart, you would see this. It shows that the Southern Company has broken through the long trigger already and is now included in the MATA long securities. What needs to be watched are each of the new energy levels above. Long trigger levels then become neutral or short triggers when the security reverses or consolidates. The actual trigger levels don't normally change in the short to intermediate term. Many of our charts are 18 to 24 months old and are as valuable as the day they were initially posted. Don't be distracted by what at first may appear to be a dated chart. The first chart in the macro analytics section then shows the first of 2 long-term monthly charts. As I mentioned earlier, the initial long and short triggers are carried over to this chart. We use a 5, 13, 21 exponential moving average to isolate trends. We overlay it on the long-term statistical regression, which historically has been heavily used by institutions. We then show a second longer-term monthly chart. Here we use the 12-24-month monthly moving average along with their respective Bollinger Bands. We try and isolate critical levels to watch for. What has not been shown on these two charts is the annotations that we do to these charts on an ongoing basis. This is where the MATASII know-how and the art comes into play. But you can get a sense from these, the canvas we start with to draw on the macro analytics. That annotations we will only show on the subscriber site itself. Here we show another weekly chart, but where we heavily use the MATA Momentum Analytics and Technical Analysis Oscillator shown in the bottom panel. Here we can see the upper MATA resistance indicator has been broken and correlates with the long position trigger being activated. This is a confirmation as both of these levels are arrived at independently. Here we have a final chart, which will soon become highly annotated since the position has now been taken. The annotations come from the trigger site, the Gordon T. Long Macroanalytics Research site, or from our technical analysis within the overall sector itself. We track the performance of all securities at many different levels with at least one SII update post daily. You can see here our call of the utility sector was timely and the securities selected have already triggered their long positions or are very near to. This is not always the case, however. Though our cycle positioning for new ads suggests they're going to be focused going forward, we may have to wait. Conversely, existing SII sectors are also changed from what were longs to neutrals to possible shorts or vice versa. Another recent sector ad is consumer staples. It is further behind utilities, but moving as expected. Our third recent ad, healthcare, actually indicating that the sector may be overbought and shorts may be the order of the day. Our tracking will sort this out without wasting time and precious investment capital. When we look at what the top 20 hedge funds are doing as a comparative analysis, we see a fair amount of healthcare short activity, confirming what we are finding. However, it would appear the hedge funds as of yet have not started the migration to increasing allocations of late cycle sectors like consumer staples and utilities. They are chasing the last remaining gains from existing allocations. They could be seeing that the cycle rotation is being delayed because of the central bank stimulus that has recently been adding, and that we are looking at very carefully also. We show here the current ranking of our sectors as well as the actual long and short triggers activated out of the 150 plus securities currently tracked. Our top SII recently has been Kratos, Defense and Security Solutions. Our daily reporting has shown a consistent 1 to 2% gain almost daily without any news at all. As we release this video, we see the Air Force making a major announcement regarding the revolutionizing of supersonic air combat. Kratos has been developing this, amongst other ideas, for some time now. Our research found it, tracked it, positioned it accordingly. The question is, what do you do now? Sell or buy more? That's what our charts help you with. We've uncovered many opportunities, though we have not put up charts on the watch list. We have seen spectacular results from, and is the reason for identifying them on the MATASII watch list. For example, as shown here, AeroVironment. All of this is what the MATASII macro analytics section can be very helpful to you in assisting you in identifying and giving you strategic investment insights into developing your own custom portfolio that suits your goals, your risk tolerance level, and your investment timeframes. So in closing, as I always remind you, remember the answer will be that they will print more money. It is the only answer politicians will ever agree on. Until no one wants it or trusts it, invest accordingly. I'd like to take a moment as a reminder, do not trade from any of these slides. They are for educational and discussion purposes only. As negative as these comments often are, there has seldom been a better time for investing. However, it requires careful analysis and not following what has traditionally been the true and tried approaches. Do your reading and make sure you have a knowledgeable and well-informed financial advisor. So until we talk again, may 2019 turn out to be an outstanding investment year for you and your family. And I sincerely thank you for listening.